You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 30th day of November, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast is our live training room. Now, that particular broadcast is reserved for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, you can do so by going to mytradingiq.com, and at the very top of the page, there's a link that says 5-day free trial. Just click it, complete the registration form correctly. Okay, it's got to be a legitimate email address. You know, if it doesn't pass the sniff test, you won't get the free trial. We just don't have the time for people who are messing around. There's too many people in the world who actually want to learn how to trade for a living. And those are the people we want to work for. Okay? So if you want to play games, go play them somewhere else. Just please don't waste our time or yours, because you will get turned away. Fair enough? All right. When the live broadcast ends, we take a 30-minute break, come back for the afternoon broadcast, which also is live, but it's open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's 2 different ways to join this afternoon broadcast live. The best way is to go to mytradingiq.com, scroll down to where it says Afternoon Broadcasts. Click that link, complete that 30-second registration form, and you're done. Going forward, what will happen every trading day, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email you received, and it will automatically log you into our platform. Benefit of that is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days that you're out of the office, away from the desktop, but you would still like to join broadcast live. You can. And there will be days when you're busy and you can't join live, but you would still like to check it out later. You can do that too. I speak of our YouTube channel, which is pretty easy to remember. You already know the youtube.com part. youtube.com/CFRN. So you got to remember, CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, we have over 2,300 daily episodes archived for your educational and viewing pleasure. If you are new to the world of CFRN and you would like to get to know who we really are, not just today, not just this week, But thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, 3 years, even more. And of course, don't expect you to watch them all, but grab a few days at random over a period of time. And then just listen in a little bit to each one that you've chosen. You'll find a thread of connectivity, a thread of continuity that's woven through not only our daily broadcast, but our very vibrant trading community. youtube.com/CFRN. Okay, let us open their daily devotional, the word of prayer. Now, our topic for the last 5 days has been God wants you free. Today, we're going to talk about the pleasure path. But first, let's go to our scripture of the day. Romans chapter 6, verses 5 through 10. I'll be sharing with you from the Message translation. That's what the baptism into the life of Jesus means. When we are lowered into the water, it is like the burial of Jesus. When we are raised up out of the water, it is like the resurrection of Jesus. Each of us is raised into a light-filled world by our Father so that we can see where we're going in our new grace sovereign country. Could it be any clearer? Our old way of life was nailed to the cross with Christ. A decisive end to that sin-miserable life. No longer captive to sin's demands. What we believe is this: if we get included in Christ's sin-conquering death, we also get included in his life-saving resurrection. We know that when Jesus was raised from the dead, it was a signal of the end of death as the end. Never again will death have the last word. When Jesus died, he took sin down with him. But alive, he brings God down to us. From now on, think of it this way. Sin speaks a dead language that means nothing to you. God speaks your mother tongue, and you hang on every word. We're dead to sin and alive to God. That's what Jesus did. Romans chapter 6, verses 5 through 10. Now, the slavery of addiction rewires the human brain. In his book, Wired for Intimacy, William Struthers looks at the physical side of porn addiction and uses a helpful analogy. Okay, it's easy for you to say. Imagine that you went for a walk in the woods. There was no path, but at the end of your walk, you greatly enjoyed what you discovered. Something like a waterfall, beautiful view, fresh river, and so on. Imagine if on frequent hikes you traced your same steps until a path formed. Let's call this your pleasure path. The more you walk that path, the wider and deeper it becomes until you can quickly make the same trip over and over with less and less conscious intent. senses of your body, your eyes seeing the path, your feet remembering the steps, would make that trip faster and easier each time you headed down the pleasure path. With most any pleasure, this same thing happens in our brains and bodies as a neural pathway is carved out through repeated behavior. Struthers says it this way: this is our decision-making system. To be addicted to something is to release dopamine, which causes you to want it and to make the decision to pursue it. That's our addiction pathway, part of the human condition. The slavery of sinful addictions is both a physical and a spiritual problem. Only through Jesus can you be redeemed from the slavery that keeps you tied to the devil and his demons. Only through Jesus can you walk away from your slavery to sin. Join me in a word of prayer. Heavenly Father, as we approach you today in prayer, we meditate on these powerful truths we found in Romans 6:5, which declare the victory of Christ over sin and death. Lord, we are grateful for the profound transformation that occurs through our union with Jesus. Thank you for the assurance that just as Christ was raised from the dead, we too may live a new life. In this season of prayer, we surrender our old selves, sin, brokenness, and the patterns of the past into your loving hands. Lord, as we identify with Christ's death and resurrection through faith, we ask for the grace to daily crucify our sinful nature. Empower us to walk in the newness of life. Free us from the bondage of sin and alive to the righteousness found in Christ. May the reality of our co-crucifixion and co-resurrection with Jesus shape every aspect of our lives. Help us to grasp the depth of your love and the magnitude of the victory won on our behalf. In moments of temptation or weakness, remind us of our identity in Christ and the freedom we have in him. May the resurrection power at work within us lead to a life that honors and glorifies you. It's in Jesus' name, believe and pray. Everybody said, amen. Amen. All right, happy Thursday, and a reminder that tonight is our members-only workshop. Every Thursday night, members only, 8 p.m. Eastern. So please have your questions ready. I'm going to give you the numbers from around the world, but I apologize. I need to ask you to hold for just 1 second. I'm sorry, guys. I know this seems like it's becoming a habit, but, well, there's this crazy little thing called life. Sometimes it's got to take care of it. All right, numbers from around the world. Starting here in the U.S. with the cash markets, or the indices, as they're called. The Dow's up a whopping 266 points. The NASDAQ, on the other hand, is down 100 points. S&P 500 is down 8.5. The Russell 3000 is up by 4. This is a market in search of direction and leadership, and it cannot find it. Now, we trade futures primarily, and so we like to see the 4 major indices, Dow, NQ, S&P, Russell, all red or all green. We don't care, because you can trade either direction with futures at the drop of a hat. But when you have the Dow up 266 and the NASDAQ down 100, S&P down 10, and the Russell up 4, well, that's just not good trading. But anyway, let me move on. The market could care less what I think. Crude oil down $2.23, trading 75.66 last. That's a drop of almost 3%. Gold down $6.10, trading 20.41 last. Silver up 18 cents, trading 25.25 last. The Asian markets at the close, the Nikkei posted a gain of 165 points. Shanghai rose 8. The Hang Seng gained 49. No movers, no shakers. The European markets at the close, FTSE up 30, DAX up 48, the CAC up 43. Again, then quiet sideways trade as this market seeks leadership, a major institution that is willing to step out and put it all on the line, to the long side or the short side. Right now, it's got a sideways waddle. Yeah, we get some spikes up and some spikes down, but just the fact that the 4 major indices are equally divided, 2 red, 2 green, it tells you there's a problem. But hey, life goes on. Okay, Logic 247. That's our 24/7 around-the-clock E-mini alert service. Currently, it's not just E-minis, it's also crude and gold and silver and bonds. And yesterday, we rolled forward gold and silver and bonds. We're in week 278 of Logic 247. Over the last 278 weeks, we've issued over 15,000 individual handcrafted alerts. Of those 15,000 alerts, we've averaged, on a weekly basis, 20% or less of the alerts being stopped out based on market structure and a very simple risk profile that I teach all of our lifetime members. This recap is good through 6:30 a.m. this morning. Valerie will update it later today. Some of these that were waiting have changed, and there have been additional alerts issued. But where we stood at 6:30 a.m. today, since the market opened Sunday night at 6 p.m. Eastern, 39 alerts, 5 never triggered, 5 still waiting. Now, I mentioned this to you yesterday. We have like a 48-hour window. It's either 48 or 72-hour window where we can edit the alerts. You know, whether it gets a thumbs up or a stop out or the Z's, which means no trigger. But after that, we don't have the ability. So when you see something marked as never triggered, keep an eye on it. It probably will. And when you see an alert get stopped out, like we had a logic alert today get stopped out on gold, that's because it triggered when a couple ticks, retraced, triggered again, and on the second time, it ran for hundreds and hundreds and hundreds of dollars per contract traded. So, again, even when you see a logic alert get stopped out, don't give up on it. Keep an eye on it. Important prices, important areas are almost always tested. And I wrote about this last night in the discussion group. Okay. And I think we'll spend some time tonight in the members only workshop talking about that market truth. Important prices, important areas, almost always tested. You see, of course you must have a hard stop on every trade. So let's say a trade triggers like gold did. You get 2 ticks into profit, and then it retraces back to where your stop would be. And then comes flying down through the trigger price again and just keeps rocking. You should be in that trade. Sometimes you have to enter a trade more than once to get the full benefit of the trade. But because we want to keep things very clear, very transparent, we only recap the first trigger of every alert. In the beginning, 278 weeks ago, I was so naive. 15,000 alerts ago, I thought I could recap every time an alert triggered, and it only took me like 2 days to figure out that dog won't hunt. So, just because a trade says no trigger, or just because a trade says stopped out, doesn't mean there's not meat left on the bone. This week, we've had 20. We still had 5 waiting. I think some of those have resolved themselves. I've published additional alerts since Valerie did the recap. So we had 29 actionable alerts, of which 6 or 21% would have been stopped out based on that risk profile I just discussed. Now, along with the logic alerts, which have been around for 278 weeks, we still have our original alert service, concierge trade alerts. Now, those are really old. I think they go back to like 2010, maybe 2012. I guess what I'm saying is they've been around a lot longer than the logic alerts. Okay. Now, there's some important differences. The Logic 247 alerts come out around the clock. The alert can come out at 2 a.m. or 2 p.m. because futures trade around the clock, and we have traders around the globe. Also with the logic alerts, there'll often be multiple targets because I've looked left for you to spot the potential obstacles to the trade reaching its final trade to target. But with the CTAs, you get to look left yourself. You see, this is a training process. Our goal is to take you by the hand and get you to the point where you're completely self-sufficient. You don't need anybody to tell you when to get in or when to get out, because you can look at a chart. You can see where the opportunity is. You've been taught by Michael day after day after day how to execute, manage, and exit the trade. We give you everything you need. Now, some people are lazy. They don't want to do the work. They just want to trade the alerts, make some money, and they're happy with that. Well, hopefully, they make enough money to carry them the rest of their life. Because let's face it, none of us are getting any younger. And so at some point, and I'm not talking today, tomorrow, or anything like that, but eventually there'll be a day that I want to go enjoy life, right? I invest so many hours and so much time in our members. It's incredible. People ask me, why do you work so hard? Because so many people need so much help. Because so many people are being lied to and stolen from over and over, again and again, day after day. It should be illegal. Apparently it isn't. So, anyway, the CTAs are posted as a static report shortly after the Globex open. Okay. We're in the Thursday session, but Thursday began Wednesday night at 6 p.m. Eastern. I got these targets out 10 minutes after the open. Now, first thing you want to do when this report is published is go to whatever markets you trade or are learning how to trade and make note of where price is at the time of the release. That number is always going to be between these two numbers. And draw a line in the sand at the long target, a line in the sand at the short target. Those lines in the sand will serve as great visual cues to help you stay on the right side of the street. Now, if price gets above the 30-minute BBC, that's the green line you'll see on my charts, stands for bull bear cross. Price is above the BBC. For bullish, we anticipate higher prices. When price is below the BBC, we're bearish and anticipate lower prices. If price is above the 30-minute BBC, it's attempting to reach the long target. Price is below the 30-minute BBC, it's attempting to reach the short target. It's that simple. Now with the CTAs, you're stepping up the game because you're now getting the chance to look left for yourself. And of course, you can use the logic alerts as sort of a cheat sheet, okay? But again, we're training you to be self-sufficient. So with the CTAs, you look left to spot those potential obstacles, previous swing highs or swing lows. And you'll learn over time how price behaves at a weekly trading zone. That's very important. Price is always trying to reach a weekly trading zone. If it's above the 30-minute BBC, it's trying to reach the zone overhead. If it's below the 30-minute BBC, it's trying to reach the zone below. We've published the zones every week for our members since December 14th of 2009. They come out Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Once you truly realize the importance of the zones, they will become one of the most important tools in your trading toolbox. And as a lifetime member, you'll have lifetime access to the zones every Monday morning 6:15 a.m. Eastern. Now, because this broadcast is open to the public, if you're not a member or trial member, you didn't get these numbers last night. So you can grab a screenshot, or if you're watching after the fact on our YouTube channel, just hit the pause button. Jot down the numbers important to you based on the markets you actually trade or are learning to trade. Because before this broadcast ends today, we're going to walk through every single one of these markets and see exactly what happened with these targets that were issued 10 minutes into the session. Okay? Very good. All right. We're going to go to the daily chart. Michael will join us at here in about 15 minutes probably. And I'm sorry to say I got to put you on hold one more time. Okay, let's try it again. I'm back, Michael. Had you been here earlier, but never mind. Okay. I always said I'd be honest with you. When most people get a cold, there's a cough button. So they just hit the cough button and they cough. And then they hit the button again. I don't know what I have, but I don't just cough. I go into this. It rocks every bone in my body, and it just goes on and on and on till it quits. And it's, you know how you're supposed to like cough up that junk? Well, this is one of those that doesn't create any junk. So hopefully I can make it till Michael shows back up. All right, we're on the S&P daily chart. We always start out. I drew in these lines yesterday, I believe, on this broadcast. If not, it was during my mentoring session yesterday afternoon. I said, we know resistance has been defined right here at this line. We also know support has been defined at this line. And where are we now? Setting right on top of that support line. So, what are we going to do? Well, if we close red today, and if definitely we close red below this line, balloon climbing is going to turn into red and falling. In fact, let me move that. It may already have. Yep, it's already turned to red and falling. Now, I've been telling you all week that if we pop up balloon climbing directly above price, it's most likely going to act as resistance. Now the balloon climbing has arced and finally turned to red and falling. The probability of us getting back to the 24, the daily VBC, and further is, well, let's call it highly probable. Now, price can really only do one of two things: go up or go down. Or when the institutional traders don't clearly see what their next step should be, we get this sideways nonsense. Okay? Now, even though we've had this sideways move on our daily chart, there's been plenty of tradable opportunities on the smaller time frame. Okay? So, whatever market you trade, whether it's the S&P or crude or gold, Walmart or Amazon, Bitcoin, some Forex pair, some ETF, I promise you, if you will spend 2 minutes with the daily chart before you start trading on your smaller time frame, your trading results will change. And they'll change in a positive manner. Because the institutional traders, the ones who actually move price because of their account size, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. Okay? When they trade, price moves. When we trade, that doesn't move price. I mean, we may get our goal for the day. I mean, price may move a few points in the direction of our trade or move against us, but we're not actually moving the price. Whether we hit our target or hit our stop loss, it's because of actions taken by the institutional traders. Now, yesterday, we had a big green candle all the way up, and climbing, which is directly overpriced. And once we hit it, bam, we fell like a rock. And so here we sit. Now, on your smaller time frame, the 30-minute chart should be your roadmap. That's where all alerts are created, on the 30-minute chart. Both logic alerts, concierge trade alerts. That helps you see where the windows of opportunity are. Once you identify the windows of opportunity on your 30-minute chart, then when price gets to that area, that window of opportunity, that's when you use what Michael teaches you every morning in the live training room to actually execute trade, manage the trade, and exit the trade. Now, I already said the BBC, the green line, whether it's on the daily or the 30-minute, if we're above the BBC, we anticipate higher prices. Price always reverts to the mean, but as long as we stay above the BBC, we anticipate higher prices until eventually price trades below the BBC. Now we get a leg down and see how this retracement back up held. Leg down, retracement, leg down, retracement, leg down, retracement. Then once we're over the BBC, now we're back to expecting higher prices. And this high right here, this high was 45.94. This high was 97.5. But this high was 97. So you see, we failed to take out this high by 2 ticks. Now, Michael's here, so we're going to pass the screens to him. And he's going to give us a recap of what happened in the live training room. We'll trade 30 minutes live on the TradingView platform. And when he's done, I will come back and we will complete the recap I was just doing. We'll walk through every one of the markets where our members and trial members got the targets 10 minutes into the open last night. Michael, looks good.
All right. I will jump into it right now. Here we go. Top of the page. All right. Good afternoon, everyone. Today is Thursday. Partners meeting tonight, 8 p.m. Reminder. Today is Thursday, the last day of November, the 30th day of November, 2023. So if you have not taken a free trial with us, go here to mytradingiq.com. Right here is the sign up for your free 5-day training, and now 9:15 to 11:30. If you click on that link, you are going to be brought to this page. No, this page. This page. Okay, on this page, just fill it out. We don't ask for any credit card or anything like that. But if you do fill it out and you have a TradingView ID, make sure you give us that TradingView ID. And if you have a NinjaTrader machine ID, give us that NinjaTrader machine ID so we can set your indicators up for you. All right. Yes, once you do that, you should probably come over here and look at the trade rules. Check out the trade rules. These are the rules for all the trades that we do in the room. Right? These rules right here, from here to there, are all TradingView. Right? These rules are all platforms. This stuff down here, the risk management and the exit, all platforms. And the stuff down here is just CT Pro NinjaTrader entry stuff. Okay. So that's all that you need to do to enter the trades, manage trades, and exit the trades. Everything you need to know is right there. You can watch some videos of me doing it live in real time. These are videos. Now, these videos are getting kind of old. We're going to have to update these videos. These are back from August of 2023. But put some fresh videos up there, and you'll be able to watch us do what we do in video, in real time, when we did it back in August. Anyway, let's get into the actual the results for today. All right, today I really wanted to get $1,000 day today, so I really worked at it. Unfortunately, the markets were cooperating with me, so I was able to do it, and I was able to do it early. I got it in like the first 30 minutes, 45 minutes. But today, if you're going to read the spreadsheet, you have to read the CFTC risk disclosures down at the bottom. Today we made 112 ticks on the NQ, 18 ticks on the Russell, 17 ticks on the crude oil, and 22 ticks on the ES. I got us to 1,095 on the morning session. Today took 20 minutes and 2 trades to get to the goal for the day. At that point, we're up $220. I'm sorry, $2,200. $220. We were up $200, but $220. $2,200. Sorry, $2,200 gross with 11 contracts on. And we took a total of 19 trades. So it took us 20 minutes to get to $2,200. All right, 20 minutes to get to $200 per contract, or $2,200 gross. On the month now, we are ending the month of November with $7,257, 20 trading days in the month of November, and we averaged $362 per contract per morning session. On the year now, this is why I wanted to get $1,000 today. We were very close. I need to hit $1,000, just a little over $1,000 this morning to be able to get to 100,000 by the end of November. And that's what I was really shooting for. And we did it. We got to $100,000. I'm sorry, on the year now we're at $100,094 over 227 days, averaging $440 per contract per morning session. Okay, so that is with one contract, 100 grand. Now, if you were to quit trading when you get your goal for the day, and you were to add one contract, one contract per month, like tomorrow, we roll to the 12th contract because we're in month number 12 tomorrow. We had to earn $2,000 per contract in November to be able to get to 12 tomorrow, and we did 31,000 in November. And that 31,000 is quitting when I get the goal for the day with 11 contracts on. All right. So on the year, we worked 79.23 hours so far on the year getting our goal, and we averaged $2,508 per hour on the year. All right. All right. Let's get into these. We did a little bit of something everywhere today. So we'll start out with the crude. How much time do we have? 10 full minutes. Okay, so we'll start out with the crude. Now, if you just did the blue arrows today, pretty much on all markets, I think just doing the blue arrows would have done everything you needed to get the goal for the day. There was a ton of activity today. I'm thankful for that because I really wanted to have a ton of activity today. And I did have some stop outs today, but fortunately I was able to get my goal pretty early on. All right, so right here was our first trade of the day on the crude oil. We picked up 23 ticks on the very first trade. Next trade, minus 10. Blue arrows in here, I didn't get, well, actually, I thought I did get a little bit of something on that one. I don't remember, but I didn't mark it. Blue arrows in here, I didn't get, apparently. Blue arrow here, I didn't get. Then I did the training, some more blue arrows. They all worked out. Finally, we got over here on this blue arrow. We picked up 2 ticks to get us to 15. Sorry, and then we had 2 more ticks over here to get us to 17. And that was all that we did with the crude oil. During the break, it kind of flattened out during the break. We had one blue arrow that would have actually stopped it out. And one blue arrow right here, we could have gotten it right back. And that was it, the crude. We ended up with plus 17 on the crude oil. Okay. And now we'll go to the Russell. On the Russell, yeah, let's go all the way back to the beginning. Okay, here we go, at the beginning, roughly. All right, so we did a little bit here. Getting started, we didn't get any of the blue arrows all through there. We did get this blue arrow. This is our first trade on the Russell. We picked up 4 ticks profit on that. 2 ticks profit on that to get us to plus 6. And we missed the blue arrow. We missed the blue arrow. We missed the blue arrow. Oh, we got to break even on that blue arrow. Then we picked up 12 ticks profit on this arrow right here. And that got us to plus 18 on one session for the Russell. Okay. We missed a couple of blue arrows here during the break. That would have been a break even. You couldn't have taken the second one. If you took the first one, you got a break even. It did not put in a lower swing, so you could not take the follow-up trade. That was it for the blue arrows. Now the ES, we had a few ES trades today too. So let's get into that over here. All right, that's going back into yesterday. All right, so there were a bunch of blue arrows here in the pre-market. We took the first one right here, and we picked on the first one. And then we took this trade right here. We picked up 12 more ticks on that to get us to 16. And then we picked up 6 more ticks right here to get us to 22. And that, another break-even trade right there. But that is where we ended trading for the ES. There was one more blue arrow in here that would have worked out if you did it. I think it was in the middle of training then, and then we get into the break. There was one here, stop to tick if you got that one. Could have made it back on that one, and then that would not have been a trade right there. Okay. Or I guess it could have been a trade. Yeah, I guess it could have been. Yeah, it could have been. That would have stopped. But that was the ES today. All right, we ended up with just 4 trades on the ES with plus 22 ticks this morning. Okay, and on the NQ now. Let's go all the way back here on the NQ. Hang on. All the way back here. Here we go. I knew we had some trades in here. All the way back to the beginning. There's an NQ trade that put us over the edge to us the goal for the day. And I believe it was that one right in there. Okay, so this is how we started out with the NQ. This was in the pre-market, so we didn't do anything with that. Our first trade on the NQ was right here. We picked up 30 ticks on that. That's where we got the goal for the day. So we had 4 ticks on the ES for $50 per contract, and then we picked up 30 ticks right there, $150. That put us at $200 per contract, and that is where we got the goal for the day. All right. The next trade on the NQ was right in here. We picked up 4 more ticks on that. That got us to 34. Then we stopped out. That put us to 14. And then we got 30 ticks there. That put us back to 44. Then 30 more ticks right here. Got us to 74. Then 30 more ticks right here. Got us to 104. Then I started the training, and so I didn't get any trades all through here. There were some nice blue arrows in here, though. That would have been a nice 30-tick trade right there. That would have been a break-even trade. That would have been a 30-tick trade. That would have been a 30-tick trade. That would have been a stop out. That would have been a 30-tick trade. All during the break. I'm not. But this would have been a break-even. Oh, this was. Wait a minute. It wasn't a break-even trade. It went from 104 to 108. So we got 4 ticks on that. And this one right here, we got 4 more ticks on that. That got us to 112. That's where we ended it on the Russell this morning, but 112 ticks. During the break, if you just take the blue arrows, there's one there, both profitable, one there profitable, and that was it. Now, those of you guys that are watching in here that don't already know this, you could just do the blue arrows, all right? And you don't have to do them on the NQ, but if you wanted to, you could just do them. The way to do that, you go in here, click on TIQ contact, and you down here and shut these 2 momentums off. Okay, and then you're only going to have the blue arrows. Okay, that's all you're going to have. And you can, you can reduce a lot of the other noise on the chart. If you want to take more things off of the chart, you can. You can reduce what you have going in here in your ribbon if you want to. If you just want things down on what you're actually looking at, you can get rid of that one. You can get rid of that one. So now you just have those 2 lines in there. You gotta have the context color in here so that you'll know when the black line stayed in the right color. So you got the color in there, but you don't have to have the outer bands really. I mean, you'll know if you're trending or not. But that's really all you need to have. Okay, and if you just have that and you just take the blue arrows, you have a good idea when it's going to be a blue arrow. You're not going to get any kind of an arrow unless you're coming out of the overbought or the oversold. You get overbought or oversold. So these little arrows, those are really warning you that you're almost ready for a trade, right? You're always going to get a little arrow before you get a big arrow. So if you just wait for the little arrows, then get ready, and then you just gather just right for the blue arrow. Right? What is just right? Price actually hits the ribbon. The black stays in the right color. That's all you need to qualify for the blue arrow. Now the blue arrow is not going to trigger until it comes out of the overbought, but you will have times where it gets buried in the overbought or buried in the oversold, and it still hits the ribbon and bounces off the ribbon without giving you a blue arrow. Okay, something like, well, not that, but well, I'm looking for an example of what I just said. I don't really see one right now, but there will be cases where it actually hits the ribbon and it stays in the oversold for a couple of bars, and then you get your trigger, you get the blue arrow after it pops out of the overbought or oversold. All right, but it could trigger before then. You can also hit a ribbon trade where if it hits the ribbon and it doesn't get into the overbought or oversold, and you still get the bounce off the ribbon while the black is in the right color, that is also a valid trade. I did take some of those today, at least one, but something like this right here. All right, that would be a valid trade too. That's got everything about the blue arrow except the fact that it's coming out of the overbought or oversold. Okay, just wanted to point that out to everybody. So to the I was using all that on the N key, right? So let me shut that off and turn that back on. And there was something I was doing today. I think it was on the Russell. I did the same thing. Yeah. Okay. No, that's not what I want to see. Put that back on. Put everything back on it. This is the one that was showing the higher probability black arrows. And put this stuff back in there. Okay, and come down here and put these back on. So we're working with a full toolbox. Yeah, this other one was to show you the higher probability black arrows. I expand that. Yeah, we didn't get too many of them today. We didn't get that many black arrows. Yeah, the longer black arrows. Those are your higher probability black arrows. Okay, the longer black arrows like that. Okay. That is something that I am working on, and maybe I'll bring it this month. We'll see what happens. Anyway, it's time to start the live stream. I have to go over there and make sure I have a live stream ready to go, and I might be running out of time for that. Let me jump in here really quickly. I did that. Hang on a second. Give me just a second here to get this going. Yeah, it's taking me a minute. It's in more than a minute with that browser. Let's try a different browser. See if I can bring it up faster. Yeah, that's what I'm going to do right now. I'm trying to bring up a different browser so I can schedule it right now. Get it scheduled. Hang on. We'll start the live stream here in just a minute. All you guys that want to see the live stream, you'll see it in just a moment. I'm going to have to schedule it for like 1:02. Community. Ready. Live streams. Choose an image. We never did get that. We never did get that thing created. Okay. 13:02. Create stream. Set that on. And start the stream. Okay, so in a moment here, right now it says no video selected because it didn't finish the process. It should finish the process here in just a moment. There it is. Now the stream should be starting and you should be seeing my charts in just a minute here. Okay, good. One thing I wanted to point out, the morning that is recorded. I did most of the recording of the live stream. So anybody that wants to go back and I can give you a link for that. Not right now, but I can give you. It's going to be, let me see if I bring that up for you. We don't have any trades right at the moment. Actually, crude oil is just got a trade too. So maybe we will have a trade. That I was talking about. Right, so that's the active stream. That I'm trying to get you a link to is right here. Right, so the crude oil. This is the link, the live stream from. I'll just paste it in here. Okay, let's take it down here too. If any of you guys want to watch that, we had. Now my goal this morning was to try to get $1,000 a contract, and I was able to do it in the first half hour. So if you want to go and watch all that, you can. Right here on the crude, we just had the down close. That's what I was talking about. We have a possible. Okay, so this is a short here on the crude, right here where it is. It's here on both sides. It's suggesting it should go down. We want to pull out of the overbought right here and work our way down. We're not going to have. This is one of those ones that I just told you about a minute ago. We went for the stop to break even, but this is one of those ones that where price comes back and hits the ribbon, but we don't come out of the overbought. This is trying to find an example where it's buried in the overbought, buried in the oversold. This is one of those. The ribbon gave a down close. That's still a valid trade. It just gave me a break even, but what it should do is go down to the weekly trading again. Actually, through the weekly trading zone below this prior swing low right here. That's what it should do. Right. So far is a break even. That's what we have so far. So my goal, I tried to paste something here, and I don't think it actually. Yeah, I'm trying to spread this out so I can see. There it is. Okay, it did stick. All right. So we ended up with a break over here on the Russell, testing the ribbon. We had all these black arrows. None of them put in a higher swing. But if you didn't take any black arrows, you can still take a green arrow if we're going to get one. And it's possible that we will be close to be up at 10.8 is what right now on that. 10.8, just like that. Okay. Sideways to down. The ES is in a no trade zone. I think the Russell's probably going to go down and not get, but we're ready for it if it does choose to go up. It is consolidating sideways here. They all are. So we'll see what happens. Right. For everyone who does not know, if you have not taken a free trial with us and you want to, the only way to access the indicators is to take the free trial. To do that, you go here to mytradingiq.com and click on this button right here. That is going to sign you up for the free trial. Well, you got to click that and then go to the registration page, this one, and sign up for the free trial right here. Okay. This Russell trade doesn't look like it's going to get it down close on this bar. It's going to disqualify the trade, I think, and we are going to get it down close on that bar, I think. So we just have to wait and see what happens. We're in a no trade zone. The background is a no trade zone. I'm going to cancel this order. Slide that down back over here. And now we wait. Here, I'll test the ribbon and give us a push down. Over here on the crude, we're just going sideways. I don't want to do anything with that. On the Russell, we're just going sideways. Russell's probably going to turn into a no trade zone here in a minute or two. Okay. Just came out of the no trade zone. The ES is turning it down. We're going to come out of the no trade zone there. There is the no trade zone on. So that's what we have to work with. I want this to pull past the ribbon here. Back up and test. That's what. Okay. And we have nothing there, nothing there, nothing there. and now we have nothing here. So I haven't really gone out to look at that and see if anything's happening out there. If you guys have questions about anything, you want to see anything in particular, all you have to do is tell me what you want to see. Okay, this is NVIDIA on a single minute chart, a 1 minute chart. Let's look at this on a bigger time frame, like a 30-minute chart, and see what it looks like. All right, so we have, well, we need this to pull back up and test the ribbon right here. Now, one of the ones that we had been looking at for a while, this test, so we're waiting for a long time for that to fill the gap that it had to fill. And it eventually did fill that gap. It took a month for it to do it. But we created other gaps while we were doing it. This is the top of the gap right here that we had to fill. Right now on a 30-minute chart, you can see the last few days here this week, it's had a run up and it's pulled back down, testing the ribbon right here. And this is kind of a weird test that it's doing. If you look at, because it got through the ribbon is what I mean. And what Dwayne was talking about earlier, when price gets above the BBC and it comes back down, you anticipate it's going to bounce. And gets below the BBC, it comes back up, you anticipate it's going to bounce. It's all the same. With stock, all the same. Okay. And this is stocks. This is what we're looking at right here. We have anything yet here? On the NQ, we had a black arrow, but because we changed directions here on the NQ, we want that to pull back up and test the ribbon. All right, we want to test the ribbon. Does anybody have any questions about anything at this juncture? Anybody? Uh-oh. That's bad news. I hope I didn't. I don't think I did. Live stream still in, Dwayne? Yeah, that's over here, I think, right? It's sorry. It's not the right live stream. All right. Yep, let me, I'm logged in places right now. Let me unload this one. Well, I guess I can leave that. No, I'm still logged in there. Undo that. I was just going to get that link. That's, I'm not logged in there. After we have a trend change, right? My rule, you don't have to do it if you don't want to. You could have taken a black arrow if you wanted to. But I like to see it bounce off of something solid, like the ribbon. After these other ones are in no trade zones. So you want to look at, and you kind of anything in ETF, crypto, anything, anybody curious? You want to see what stuff looks like on? Happy to help you. Okay. Huh? Waiting here right now. Okay. We're in a no trade zone. We're in a no trade zone. We're in a no trade zone. We're going through. Let's see, those are in the weekly trading zone. Dane. Okay, I see. Lines and the red lines in the weekly trading zone. I was just talking about those, Dane. As a matter of fact, the weekly trading zones are areas of support and resistance that are created at the beginning of the week. All right, they are like a roadmap for the rest of the week. You can see, all right, price is always going between, well, it's going between support and resistance. So let's just say at the beginning of the week, we say this is a support, this is a resistance level. If you get in between it, then you're gonna be going, you know, right, whichever way you're going, up or down. On a larger time frame, you know, the BBC is the green, the let me look at it on a larger time frame and show it to you. Here, we did this morning. Here we go. If you're looking at it on a larger time frame, like a 30-minute chart, if you're above the BBC, price is trying to get to the weekly trading zone above. If you're below the BBC, price is trying to get to the weekly trading zone below. Now, today we had so much activity that, let me go back to a pointer thing here so I can change this. Today we had so much activity that we just jumped around from zone to zone pretty quickly. But on a normal day, when you get below the BBC, price is going to try to get to the weekly trading zone down below. And it's going to do that. And when it does, like in here, it got above the BBC, it was trying to get to the zone above. It got to the zone, pulled back down to the BBC, tested it again, then it's trying to get to the zone above again. And zone above is right there. Okay. So you have that information at the beginning of every week. It's kind of like a roadmap you can use for the rest of the week. And you're going to be trading in between those, right? So price is always going up and down on its way to get to one of these support and resistance. Price is always going up and down and up and up. And if it gets to the midpoint like this, it'll often and then continue up and up and up and up. And so what I want to do is teach you how to trade, grabbing these places right here. You'll notice that I only grabbed the first one of these. I didn't grab that one and that one, because you don't take another trade until you continue the trend, right? Continue the trend means you exceed that prior swing high. In here, it didn't exceed the prior swing high until right there. So this is right there, then right there. Now, why do we do it like that? That's so much more trading, right? Well, yes, it is so much more. Look at this time period right here between 12:35. We'll say 1:05. It's a half an hour right there. And in that half an hour, we got 1, 2, 3, 4, 5, 6 times that you could have traded. Just use an example. 6 times that you could have traded. Every one of those in this example would have gotten you all you need to get the goal for the day. All right. You don't need to trade 100 times a day to get the goal you achieve every day. And once you achieve that goal, you just quit trading, because every time you take a trade, you have money at risk. Right. So you get in there, you get your goal for the day, and you're all done. You don't need to take 6 trades. If you want this, you got risk. Like this right here, the risk on this would be something like this right here. But if you want to do the whole thing, then the risk would be, well, I can't draw it right here because it'd have to be too far down. Your risk would have to be like way down here. All right. If you wanted to do this whole bunch right here, your risk would have to be that whole bunch plus 50% more. All right. So you got to reduce the amount of risk, the amount of potential loss on every trade. You just take smaller trades, smaller bites out of the middle. To pick tops, and we're not trying to pick bottoms. We're trying to take smaller bites out of the middle. All you need, if you can take 1 or 2 of these smaller bites out of the middle. I mean, this morning it took me half an hour to make $1,100 or $1,000 with one contract. So I made $11,000 in a half an hour, like taking little pieces like that. That's all you need to do. And you got to work your way up. You don't start out with 11 contracts. I started the year with 1 contract, and I worked my way up to 11 contracts. And tomorrow, because we're going to a new month tomorrow, I'll be at 12 contracts. So tomorrow morning, I don't know how volatile it's going to be tomorrow morning. I'm hoping for another day like today, but I doubt I'll get it. This was our best day of the month, actually. And it was kind of funny because I was saying that the last 2 days have been really slow, right? The last week, it's been really slow. And I was saying tomorrow, we haven't had $1,000 day in, well, since it'd been actually a whole month. Our last $1,000 day was $1,095, and $1,095 a whole month it took to have another $1,000 day. And I said I needed that today to get to 100,000, and I was able to get it this morning. For those of you guys that were watching, you can go back and watch the whole thing from this morning, if you want. Dane, I'll post that link in here again. I think this is the stream. Yeah, you can go back and watch that from this morning at that link right there. That was from the morning session that I recorded in TradingView this morning. Okay, and you see the whole thing where I got it all this morning, and it was really active trading. I was jumping around really fast, and I was doing everything really fast. I did slow down enough. Once I got the goal for the day, once I got to $200 a contract, I did slow down and fill this out, put it all in, and then I jumped right back in and traded some more because I had another $800 that I wanted to get. But that's what those lines are all about. Dean. your friend who's watching. The black lines are support and resistance levels. They're weekly trading zones that are distributed to all active partners and passport holders every Monday morning at 6:15. The red line in the middle, this red dashed line, that's the midpoint between the zones, and that's often going to this area of resistance, like it did right here, or someone from the other side. And the weekly trading zones, most of the time when price gets to the zone, it's going to consolidate like that, or the midpoint, it's going to consolidate like that. The zone is going to consolidate like that. Sometimes it's just going to bounce off it like it did right here, and sometimes it'll go right through it. Going right through it is the least likely. Like this right here, that's the least likely. Bouncing off it like this is second most likely. Consolidation is the most likely. All right. But so what do I use them for? I use them for targets. They're places not to trade and places to use as targets. If you have an opportunity to trade and you have a weekly trading zone near you, you know, part of the training, this blue arrow right here is perfect. Part of the training is knowing when to enter, right? When to pick these little things off. So if I erase those drawings and I do the same thing that I just described to you, right now I'll just draw it for you, right? So in here, price was going up and down, up and down, up and down, up. Right here, it failed to go up anymore. So our indicators are telling you where to get in, where to get in. This one didn't give you anything right there, but where to get in. And then when it doesn't continue in that direction, you don't get any more indication to take any more trades all through here. And then when it starts going the other way, up and down, up and down, up and down, it's telling you in here where to get in. So you can just take some profit. All right, and this one right here, it didn't actually put in a lower swing, so this blue arrow is not valid because it didn't get a lower swing. Well, you could if the blue arrow was the only thing you were taking. Now this goes to the nuances and the rules. Any blue or green arrow means it's bounced off the ribbon. Anytime it bounces off the ribbon, it gives you a blue or green arrow. It has to put in a lower swing before you can take any other trade in that direction. Black arrows, if you don't take any of these trades and you get a blue arrow or a green arrow, you can still take the blue or green arrow, okay? But once it's bounced off the ribbon, it has to continue the trend. After it gives you a blue or green arrow, whether you take the trade or not, it has to continue the trend before you jump in that direction again. The reason is so that you don't get mixed up in this junk right here. You know, you don't stop out here and then say, oh, well, this is the one. And you stop out there and say, oh, well, this is the one. And you stop out there. You don't stop out 3 times in a row. If you get caught up in some chop like that, you only want to get caught once. Okay, that's why that rule is there. You only get caught once in that junk. This here was all good stuff. You couldn't have taken this blue arrow unless that was the only one you took. All right, then you could have taken it and gotten your goal for the day right there. What did you need? 20 ticks on that to get your goal for the day, right? That's all you needed was 20 ticks. And so if you took it, the tree was here, we'll say 76. Let's see, you entered at 70, lower than top. Let's say you entered at 76, okay? You needed 20 ticks from 76. That is 5 points. So you need to go down to 71. And went all the way down to 69. So it went 7 points or 28 ticks. Okay, that's all you needed. Is that right? 7 times 4? Yeah, it's still 28. I think. That's all you needed. That would have been the goal for the day right there. That one little trade. Okay, could have done it here. Could have done it here. If you just learn one thing, just learn the blue arrows. Learn how to expect them, when to expect, and how to be there taking the trade. Like, well, we haven't hit the black yet, so we could still get a blue arrow on this. If somehow this got into the overbought and gave us a down close, we'd have a blue arrow. But as it stands right now, we could get a down close and no arrow because we're not coming out of the overbought. Now it's pulled up a little bit deeper, but the bar's got to close up to get this into the overbought to give us any kind of arrow. The chance that this will close up and give us a down close into green arrow right here. Okay, see how it's pulled back up and it's hit the black line now? So you're not going to get a blue arrow on this. Okay, now there's a chance to get a green arrow. You're in the overbought. If this bar closes down and the black line right here, let me spread this out so you can see it a little bit better. See how the black line is no longer in the red, so there's no way you're going to get a blue arrow. But if it were to close down, I don't think it's going to. I think it's going to close up and disqualify the trade. But if it were to close down, pull this out of the overbought, you got a green arrow. This green color this green color got into the black right there, that black line, that disqualifies all short trades. So you won't have it turned down. So what you have is probably a direction change. If you look left, the support right here. There was support right here the last time it hit it, the support right here again. So what's it going to do? Well, we don't know. Just got to wait. 90% of what you do in here is wait. You wait for the trade to set up and come to you. Okay, it's not hard to do, really. And when you're learning in the beginning, you don't have to do 4 markets like this. You probably just do a couple. The NQ should probably not be one of them. Unless you just like to watch things bounce around. But you shouldn't learn to trade on the NQ because the NQ can swallow you whole. And it's really fast. It would be really, really fast to do that one. The ES is, the ES and the Russell would be okay. You do a pair of those together. If you want to do something other than indices, you could do the ES and crude oil or the ES and gold. The thing you run into there is that the margins for gold and for crude oil are pretty high. Okay, compared to everything else. But there you have it. Any other questions? Anybody? I am happy to go over stuff. Though I feel like I've been talking nonstop today. We're about to bounce over here on the crude oil. We're in the ribbon right now. We haven't hit the black line yet. We're oversold, so we could get a blue arrow here on the crude. Right, it's going to be 74 up to 82. 74 up to 82. Okay, so when I say that, what I mean is the bottom of this bar is at 74, so buy stop limit goes at 82. The bar is going to close here at 81. I know that ahead of time. If the bottom stays where it is and it closes at the top, it can only close at 81. If the bottom stays where it is, it can only close at 81. And so I have my order waiting. If it does close there, it's going to fill me somewhere around 82. Probably won't fill me right at 82 because I get a lot of slippage. Didn't even fill me yet. Okay, well. Okay. Yeah, I should have been there. Okay, I'll go look at that in just a second. Yeah, so we filled on this trade, right? And the rules for this, are here. If you go to mytradingIQ.com, now that I'm in the trade, it doesn't really matter. It looks like I'm going to stop anyway. But the rules for this with the 7-tick range bar, that's what we're using here, the 7-tick range. You see I got 2 ticks of slip on that. But the 7-tick range bar starts out with a 10-tick stop. And the stop goes to break even after 4 ticks in profit. Now, I didn't get any ticks in profit on that one. I just stopped out and I was minus 10 ticks on that. That's because I had a 10-tick stop. All right, so it stopped me out at 10 ticks. That's okay, that happens. I don't win every single trade. All right, so let's go back to the live stream and read the actual question so I can see the question. Hang on, I'm trying to find that. Here it is over here. Okay. How would I trade the Nikkei USD? Give me a symbol. Give me a symbol and I'll show you how you would trade that. I stopped out on this. It did not go enough into profit to get the stop to break even. And okay, let me go here and do all and do N I K K E I / USD. Did it not go? There it is, USD. Oh, but it's not giving me that symbol. Oh, I did IE. I'm sorry, I did IE. EI. Okay. NK DZ / why is this taking so long? / USD. Still not doing it. Oh, it's right here. USD futures. And it's on the CME. Woohoo. It's on the CME and it's 33,000 bucks. So doing this on a 15 range at 33,000 bucks is probably not, well, it's not that bad. 15 range, it doesn't have that much volatility. Look at it. This is a whole day's volatility right here. That's not, each one of these bars is like 15 minutes. So with something that doesn't have a ton of volatility like this, Chelsea, you're going to want to do that on a smaller time frame. All right. Do it on something like this. So even this time frame right here, you see from 10 o'clock to right now is only about 12 bars. So you go to a smaller time frame. Something like this. Okay. Where you have actually have some movement so you can do stuff. This isn't like bonds. You'd have to do it even on a smaller time frame. Like bonds, you look at on like a 3 range or 2 range. You look at it on something really small like this. Okay, now everything is going to be the same except negativity. You're going to have to adjust the sensitivity so you have the no trade zone where they're supposed to be. You'd go in here, adjust your sensitivity to something a little larger than 0.35 because you want it to be no trade zones where it's flat. Okay, but because there isn't a ton of volatility, you're not going to get that many blue arrows. You're going to have more black arrows than blue because price doesn't move around that much. But this is how you trade it the same exact way. You just do it on a smaller time frame to be different. Because what is this, a 3 range? You stop, it'd be like 4 ticks maybe. And your target would be like 4 ticks. All right, something similar to that. That's how you would do it. Okay. Any symbol you can put up here is volatility. You can trade it. You just got to figure out the sensitivity, because if the sensitivity is wrong, you're going to get no arrows at all. You want to have the sensitivity showing where you have flat spots. Like this is a little too loose right here. You might make that a 0.75. So you see more blue in here, more no trade zones where the market's flat. Okay, that's what you really want. You're not going to get any arrows in there where the market's flat. But what you're looking for is for price to pull out of the oversold, to pull out of the overbought. When the long-term trend, these outer bands are in favor, and prices either come down and hit the ribbon and bounce off it or not. No, it doesn't have to hit the ribbon and bounce off it. But the oversold is going to give you a black arrow as long as the other things qualify. Okay. That's how we trade that. Wow, it's 1:30 already. The ES at the withdrawal. Let me put this back to the NQ. Did it? Hold on. What was the other question? Let me stick to this and say there's something I can't see the whole thing. The question you want to see NQ CD. There's one more question up there. Don was asking a question about the ES in the weekly trade zone. So let's look at that. The ES in a weekly trading zone. And let's look at it on a 30-minute. Right? It is right there. And let's look at it on a 30-minute though. Come here and look at it on this 30-minute chart. So the ES is down to the weekly trading zone right here, right? We got below the BBC. It's going down to the zone, stayed below it, went down to the zone. Right now, the black line is still below the MA1. All right, when that black line crosses into the MA1, then I would look for it to pull back up and test the BBC. But for right now, it's still bearish. It should go through this weekly trading zone, Don. I would look for the midpoint between here and the next zone. Right here. Oops, there. Okay, up here. Got rejected. Yep, hit resistance, got rejected. Right. Down here, bounce back up to this one, acted as resistance. Now the zones are so close this week that it's kind of to the ES because they're so close. And I really wanted to have a big breakout day. I hope tomorrow is even better, a bigger breakout day, down a whole bunch more, or go up twice as much. Now I hope what we don't have tomorrow is a 50% retracement of today. That's what I hope we don't have, or even 100% retracement of today. I'd really rather see it be continuation on the way down. And then maybe by the end of the day tomorrow, have a 50% retracement of all that. That's what I'd really rather see by the end of the day. the end of tomorrow. So next week, our zones are not as close as they are this week. That's what I'd like to see, right? But for right now, the black line has not crossed over the MA1 yet. If we go sideways here a little bit and the black line does get above the MA1, then I would look for it to get up to the BBC. Then I would stop thinking it's going to go down here, and I would start thinking it's going to go up to the zone above and to the weekly, to the BBC. That's what I would think about the 30-minute. Okay. Now you can look at that here on TradingView too. It's easier for me to do it over there when I have the 30-minute chart already going with all the indicators on it. Let me put this back to the NQ15 range before I forget about it, and then set the context back to 0.35. I usually don't screw these up until tonight in the partners meeting, and then I really mess up my charts. All right, so there you have it. There you have it. It is now 1:33, so I run over my time in here today. If anybody has any questions about this, or if you haven't taken a free trial and you want to, go get to mytradingiq.com. Right here, sign up for the free trial. All right, sign up for the free trial right there. Now, if you've taken the free trial and you want to take part in any of the other stuff, like right now we have the Cyber Monday deal. I still haven't changed the link on that. So we still have a Cyber Monday deal going right now. It's at, what should I call that? It's on here somewhere. Let's see. I sent it to Valerie. Hang on, I'll find it. It's mytradingiq.com/ still looking for it. There it is. TradingView.com/ payment. There it is. Cyber Monday special. A-payment. If you look at that, okay, we still have that deal going on. I changed the link yet. That's it, guys. With that, I got to wrap this up. I've gone over 5 minutes now in the live stream, so let me wrap up the live stream. If you haven't taken a free trial and want to take a free trial, go to mytrading.com. Right here on the home page is how you sign up for the free trial. If you already have taken the free trial and you want to get started, you have a chance for a pretty good discount until I change that. All right. I'm going to end the month of November with $7,257 a contract. That is one contract for the morning session. Right now on the year, we're at $100,094 with one contract on the year. And that's it. Wrap up the live stream. Thank you everyone for coming. If you have any questions, yes, thank you for saying that too, Jessia. Anyone who is, well, just take the free trial if you haven't taken it yet. All right, gonna wrap up the live stream. All right, and we saved it. Okay. So with that, I can pass it back out to fabulous Phoenix, Arizona, and Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am. Okay. So, recap of the morning session.
Today it took, hang on, it took 20 minutes and 2 trades to get to $2,200.
Great job. What a way to end the month.
It was a fine ending to the month. Hopefully December will be better.
Okay, guys, we have covered the daily chart. We did that before Michael came on, so if you missed it, probably an hour after this broadcast ends, you can go to our YouTube channel, youtube.com/CFRN, and watch the entire thing in its entirety. Okay, sitting right on top of this little support. See, we got to break the low of November 28th. Low of November 28th was 25.47. I guess that's not right. 7. Today's low, 45, 44, 75. Guess we have already broke. Doesn't look like it, but that's what it says. Okay, let's get rolling. As I mentioned earlier, all alerts, logic alerts, concierge trade alerts, are based on the 30-minute chart. And I showed everyone all the targets that were published last night, in case you weren't tuned in then. If I can find them, I'll show them to you again. Okay. There it is. Okay. So I'm doing this because it's really important that you understand, if you're new, not a member. The CTA targets are published as a static report shortly after the Globex open. So last night, the Thursday session began at 6 p.m. Eastern, Wednesday night. So 10 minutes into the first 30-minute candle, all these targets were sent to our members and all of our trial members. So the vertical line on this 30-minute chart separates today, Thursday, from Wednesday, Tuesday. Okay. See how when price runs up to a zone, resistance, drops to a zone, support, resistance, then retracement, and then it continued higher, made to the next zone, and came right back down through and filled that window and that window, that window. Pretty much gotta love it when that happens. Now, here's where we opened last night. This was the 6 p.m. opening 30-minute candle. So 10 minutes into the life of this candle, the targets were published. But we opened with resistance overhead, the zone, and potential support below, because red and falling had gotten directly below price and then turned to blue and climbing. Okay, so it took us up to BBC, and we ran into trouble right there. We had this high yesterday. Then we get back below the BBC in the zone, and we drop right to the target. The market finds support, it will go look for resistance. It got above the BBC, leg, retracement, the pullback to the BBC holds more often than not. And so from here, take you right up to the target. Now, in this candle, let's just go with this candle. Let's be real conservative. 45.71, 45.77 at 6 points. And if you wanted to be conservative and just get out at the zone, if you entered on this candle, which opened at 45.71, that would be 4 points up to the zone. Remember your goals, 2 points a day. When the market finds resistance, and why did price stop here? Okay, we had a green candle, and then this candle opened green, ran all the way to the target, and then it stopped. You can answer most any question like that just by looking left. And we'll teach you hands-on how to do that during your trial. And if you become a lifetime member, you'll have access to unlimited one-on-one mentoring sessions. So price gets below the BBC, bounces up to the BBC. Just as when price pulls down, we expect support. When it pulls up, we expect resistance. And if you've got red and falling overhead, And that means you're probably headed lower. So we indeed headed lower, not only to the target, but to the zone, and we even spiked the zone. This low, okay, get the horizontal line on my cursor. Okay. This area of support was established back on Tuesday. And then on Thursday, kicked in, sent price back up. Whenever the market finds support, and knowing where it's most likely to find support, I can't even begin to explain how beneficial that is. Now, as price ran back up, you'll see this wick came within a couple ticks of the zone, which is resistance. So that sent price back down through the zone, and we pull back up to the zone, which we expect to be resistance, and then bang. The zone is 45.46/47, and this low is 46.5. So what we would expect to happen is exactly what happened. This isn't a one-off, had a lucky day kind of thing. On our YouTube channel, youtube.com/CFRN, as I mentioned earlier, there's over 2,300 daily episodes archived for your educational and viewing pleasure, where I do exactly what I'm doing right now. So, like I said, scroll back. Go back 6 weeks, 6 months, a year, 2 years, even more. Just pick a few days at random. You don't have to listen to the whole thing, but fast forward up to the part where I'm doing the recap of the CTAs, and you'll see the same thing again and again and again. You see, there are certain underlying principles upon which markets operate. Our strategy, our methodology, is built on those underlying principles that, sadly, many traders never learn. So we come down to the zone, all the way to the zone's 46.47, come all the way down to 46, then we run back up, and we run back down. And spike the zone just a bit. Spike the zone just a bit. And there's your answer. It's not magic. It's not voodoo. It's what we refer to as logic, but the more logical it becomes, it will start to just be common sense. You'll learn how price flows. Not just on futures, but individual stocks, every crypto, every forex pair, every ETF. That's how markets work. You go from support to resistance, back to support, back to resistance, over and over, again and again. And when you become a member, you'll learn how to determine where those areas of support are, where those areas of resistance are. And you'll learn how to find the window of opportunity in between. Price is always trying to do one of two things: break the previous swing high or the previous swing low. Okay, here's the previous swing high. Here's the previous swing low. Now, if you were a bookie or an odds maker, and what we do has nothing to do with gambling, because we follow a very strict set of rules. But would you say that there's, if it's true, and it is, but I want you to prove it to yourself, the price really is always trying to break the previous swing high or the previous swing low, which has the greater probability that this gets broke today or this gets broke today? Now, what would I do right now? Nothing. Because 46, 47 is the zone. You're below the BBC, so you're only thinking short trades. So you need price to take out this low, and then you've got this area down here. Next zone below is 45.23. But as you look to the left, you'll see that there may be very well some obstacles on the way to the zone. Remember, price is always trying to get to a zone. Price is above the BBC, it's trying to get to the zone above. Price is below the BBC, it's trying to get to the zone below. And again, the zone below. Pretty simple, right? Trading's not easy. But when you have someone who's willing to actually teach you how to do the job, it can be simple. So here's where we opened last night. These targets came out 10 minutes after the open. We opened above the BBC, so we're immediately thinking higher prices. We pull back to the BBC, and it holds. And then you get this close above blue and climbing. So you naturally expect price is going to head higher. So you buy the open of this candle, which was 35,583. 35,583. From 583, it ran to 634. It's about 50 points. You only need 20 points to get your goal for the day. When the market found resistance here at the target, it pulled back to the BBC, pull back held. Here we go again to the target. We break that resistance at the target. And we scoot through that zone, trace to the BBC, try to put in another leg here. Now, on the Dow, this is the highest weekly trading zone for the week. However, by close of business tomorrow, we anticipate that price will be at or below the highest weekly trading zone. Has there ever been a week when price closed above the highest zone or below the lowest zone? Yes, a handful. Or maybe two handfuls since December 14th of 2009. Okay, but that's the anomaly. With red and falling overhead, that is a definite obstacle. Before you could even begin to think about trading long, you got to clear red and falling. That's 35,790. See, this is potential resistance, this is potential resistance, this is potential resistance. I wouldn't consider going long until I got up here. But I suspect, here's the most recent swing low, most recent swing high. My thinking is that there's a higher probability of us breaking the previous swing low and the previous swing high. Could I be wrong? Of course. Russell, here's where we opened last night. We had red and falling. The step line crossed red and falling. Now, when that black step line crosses red and falling, you expect a pull back to the BBC. And it happened just like clockwork. Red and falling turned to blue and climbing. Okay? But then price got below the BBC. Blue and climbing turned to red and falling. This candle opened at 1805.70 and dropped to 1880. So open at 1805. So you had almost 5 points. You only need 2 points to get your goal for the day. Then price gets back above the BC. And off we go. Now we have to expect this to be potential resistance. Okay. And it was. Because it sent price back down a little bit. This candle opened at 1270 and ran to 1560. Almost 3 points. Only need 2 points to get your goal for the day. So we finally hit the long target. Then price gets back below the BC. Going climbing, turns to red and falling. You now have potential support right here, and right here. Okay. Is there enough room to trade this? Because you got to get below this low. So let's call it 1807. Down to 18, not even 1806. No, there's not enough room before you run into support, potential support. What about here? 1805 to 1803 and change? Nope. Not enough room. From here, got to get below that swing. We'll call it 1802. Not enough room. So in this case, you need to see price break through that zone. In other words, you got to take out this swing low, this swing high. Okay. So we come through that zone, and bang, there's your target at 1796. And then, of course, looking left, potential support, looking left, potential support. People always say, well, how far left do you look? Till you find what you're looking for. Sounds like a flippant answer, but it's the truth. Okay. In Q. So we opened, trapped between potential resistance and potential support. So price walked us all the way up to the zone. Now, remember, these zones were published Monday morning at 6:15 a.m. Eastern. Here it is a Thursday. They're still doing their job. Okay. So we hit the zone, pull back, the zone again, get another pullback. That's how price moves in legs. Get a leg and a retracement, a leg and a retracement, a leg and a retracement, a leg and a retracement. Whether you're moving up or whether you're moving down. So at this point, price gets below the BBC. That was at 9 a.m. Eastern this morning. Below the BBC, got red falling overhead. This candle opens 16,050 and it's in a low 16,027. You only need 5 points. Then when this candle closes, this candle opens and runs up to the BBC, which we expect to be resistance. And then as we take out this low right here, 16,023, it's 10 points, $200 per contract traded. We go through the zone. Now the zone's 941/942. So we expect support. Bounces price all the way back to the zone overhead, to the tick. The market finds resistance, it'll go look for support. Finds support, it'll go look for resistance. Over and over, again and again. And right now, where do we have support? At the weekly zone. If price can take out this low, there's a huge window of opportunity here. But you got to look left as far as you need to find what you're looking for. Otherwise, you're just trading line. You have no idea where a break of this low, you have no clue where potential support is other than the zone below. But I guarantee you there are obstacles in this path. And so look back as far as you need to. Crude oil. Here's where we open. Price was trapped between support, potential resistance, consolidated at the zone for a few hours. 70% of the time, this is what will happen when price hits a zone. Consolidation. 20% of the time, rejection. And then 10% of the times, the slice. So here we get above, we're already above the BBC. We got red and falling. We needed to turn to blue and climbing. So the open of this candle, 77.92, it's $180 up to the target. Consolidates, pulls back to the BBC, and runs all the way up to 78.79. When the market finds resistance, what's it going to do? It's going to look for support. And it found it. See, that long target was resistance on the way up, but coming back down, it became support. So price takes off, everything's in place. Above the BBC, got blue and climbing. So the open of this candle, 78, we'll call it 78.40. 79.40, that's $1,000 per contract traded. When the market finds resistance, look for support, which you found at the BBC, which sent us back up here, another $1,000, and created a daily top for the session. Again, this is Thursday, this is Wednesday, this is Tuesday. Then price gets below the BBC, and the bottom falls out. We rip through this zone, we rip through this zone, so we run into an area where we would anticipate support. Market finds support, it'll go look for resistance, which it found it red and falling, and then it took us back to the zone at 75.70/75. Hopefully you're getting the picture. We trade every market exactly the same. Every market. It doesn't matter. Futures, stocks, crypto, forex, ETFs. What I'm showing you is that price flow is the same across all markets and all time frames. But you need someone to teach you how to read the chart and how to manage your trade, how to spot a window of opportunity. Then once your price reaches the window of opportunity, then you do what Michael teaches you in the live training room every trading day for 2 hours and 15 minutes. So we opened last night right here, and well, we opened here. We dropped a little bit, but then we got back above where we opened. So that would be roughly 2069. Did this candle open at 2069? It did. 2069. $180. Come back to the BBC. And now we're dealing with red and falling. So we get a lot of congestion across here. We get below the VVC and we make it almost to the target, more than enough to get your goal for the day. Support sends us to resistance. Resistance sends us looking for support. Now gold, we are well above the highest weekly trading zone, 2031. We did roll gold forward this week, but when that happens, we don't change the zones, because the zones are not based upon a contract. They're based upon price. No matter what market you trade, no matter what time frame you trade, the clock on the wall is always price. Okay. So we come down, back to the VBC, spike it. Gotta be expecting resistance there. See, price was trying to break the most recent swing high. Couldn't do it. So that tells you there's weakness in the market. So now we go to the short target and through the short target. And this low right here is tied to this low right here. This is Thursday, Wednesday. This support was defined on Tuesday. See, when this candle opened, it opened red. By the time it closed, it was very green. So we know there are buyers in this area willing to pay that price. And they did. Shot us back up to the BVC. And we're going to go back down and test this area again. If we take out this low, and you've got to anticipate support here, 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 then you got a clean shot down to the highest weekly zone. Now again, we're way above the highest weekly zone, but based on historical fact going back to 2009, we expect price to be at or below the highest weekly zone by close of business tomorrow. If that doesn't happen, will that send us back to the drawing board? No. Things happen. This is the truth about trading. The track record established since December 14th of 2009, well, it speaks for itself. Silver, we've rolled forward to GSIH24. On some of your platforms, it'll be SIH24. This platform throws a G for a lot of stuff. Crude, gold. See, on other platforms, it would just be CLF24 or GCG24. So why does this platform stick that extra G in front? I don't know. Okay, here's where we open, and we run up. Okay, we open here. We go down to blue and climbing, which is support. So that sends us back above the open. We'll call it 2540. And it took us up to 2559, which was the target. So from 25.54 to 59, that's 5 pennies. $250 per contract traded. Only need 2 pennies in silver to reach your goal for the day. So we get below the BVC, we get a little move, a retracement, and we hit the short target. Hit the long target, hit the short target, get above the BVC, this one candle right here. You're above the BVC, so you know you should be thinking about trading long. Okay, this candle opens at 25.46, runs to 25.51. That's another 5 pennies, or $250 contract traded. Pull back to the BVC, run to the long target, pull back to the BVC, run to the long target. Now, why did price, this was looking extremely bullish. But you see how that step line has crossed? It tells us price is going to pull back to the BBC. But why did this candle stop here? Look at the crosshair, the red line. Okay, this high today is because we were unable to break yesterday's high. Yesterday the high was 25.68. Today the high was actually 25.60. We actually did break it by a half a penny. Okay, but anytime you get a new high or new low, only a couple points or a few ticks, be very suspect. Make price prove itself. Okay. Long target, short target, short target. Long target, long target. Now I've showed you a lot, but remember you only need $100 per contract traded on a daily basis. And then over time you add additional contracts with the profits you earn in the market. Our 24/20 blueprint is going to start you out in demo while you're learning the strategy. And you go live with one contract. Once you increase your account balance by $2,000, the blueprint will give you the green light to add a second contract. The huge difference is the first contract is funded with your startup capital. The second contract is funded with profit you earned in the market. So 2 points in the S&P is worth $100 per contract. But once you've earned the right to trade 11 contracts or 12 contracts, which is where Michael will be tomorrow, then the same 2 points is $1,200. So we hit, this is the euro. So we hit the zone, resistance, hit the zone again, resistance. Finally came down to and through the short target, down through this zone, all the way to this zone. This support sent us up to this resistance. This resistance sent us down to this support, where we bounced a little bit, and then continued our way down to the zone below, to the tick. There's still one more zone left below for this week. Trading is not easy. Can be simple. You got to find somebody willing to teach you how to do the job. Want to become a plumber, electrician? You can go out and buy all of the fanciest tools of those trades in the world. Even get you a little van with a caricature of you on the side of it. But you're not a plumber, not an electrician. You have the tools of the trade. You even got the cute little van. You still need somebody to teach you how to be a plumber. You still need somebody to teach you how to be an electrician. You still need somebody to teach you how to trade. Become a lifetime member. Go to mytradingiq.com. Call us at 949-42-EMINI or email us at support@cfrn.net. Lifetime membership. No recurring fees. No upsells. No nonsense. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. As a passport holder, you'll have access to the live training room every day. Unlimited one-on-one private mentoring. Strategy you learn and the indicators you own for life are fluid across all markets, all time frames. Plus you get the logic alerts, the concierge trade alerts, and you get to attend the members only workshop tonight if you get busy and become a member. Okay. Everything a trader needs, all under one roof, one low price. You'll never spend another dime with us. as long as this current offer exists. And if this current offer changes after the new year, don't worry. If you're already a passport holder, you're locked in for life. Price could double next year, triple, quadruple, whatever. Won't affect you because you're already a passport. Let's wrap it up with a good word for the day. Yesterday we talked about evangelize or fossilize. Today we're going to continue that, part 2. Acts 2:47. The Lord added to the church daily those who were being saved. The church has only 2 options: evangelize or fossilize. Now that doesn't just apply to the church, it applies to any business you might own. You're always doing one of 2 things. You're growing or you're dying. So whatever kind of business you have outside of trading, you should really think about that. Am I constantly doing new things to build my business, strengthen my business, widen my exposure? Or am I just resting on my laurels till everything collapses around me? I've seen it happen to a lot of people. Don't rest on your laurels. Get busy. When we fail to share our faith with those outside the church, we either end up in a holding pattern or in death throes. The New Testament church's growth is described in these words in Acts 17:6. Not only did they influence every level of society, but their enemies said, "These who have turned the world upside down have come here too." Again, that's Acts 17:6. If your church closed its doors tomorrow, would anyone other than your congregation even notice? Think about those early believers. Their assignment seemed geographically impossible. How were they to reach people in far-off places? They had no air travel, no radio, no television, no printing presses, no internet, or any other modern means at their disposal for communicating the gospel. It seemed legally impossible. They were forbidden by the government authorities to speak in Jesus' name, and it seemed socially impossible. After all, who would really listen to a bunch of Galileans devoid of culture and class? Yet, they were witnesses through the power of the Holy Spirit, and people did listen. They did so much with so little, and we seem to do so little with so much. It's reckoned that if just 10% of the members in the average church got serious about evangelism, their church would double in 1 year. By the way, the word translated witness is the same word from which we get our English word martyr. These early believers reached the world for Christ because they were willing to devote their lives for his cause. You must be too. That's our good word for today. Thanks so much for tuning in. Wherever you are, God continue to richly bless you, his mercy, and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.